Hello and welcome to Market Today. I'm Siddharth Zarabi and with me my colleague Sakshi Batra. Joining us today on this episode of Market Masters is Aditya Narain, the managing partner at Col Capital. Aditya, welcome to the show. It's the first day of Modi 3.0. The swearing in has been done. The Prime Minister has signed his first file, and that's for a 20,000 crore outgo with regard to what is given to farmers. And we are now counting down to the portfolios, including some of the big ones, the Finance Ministry, the Commerce Ministry, Telecom, the infrastructure portfolio, especially highways and roads, and the first cabinet meeting at 5 p.m. today. Meanwhile, the markets are up. They opened at record highs today. So before we get into some of the market-specific questions, I want your sense of what you're making of Modi 3.0 and what kind of expectations should market participants factor in.
Okay, great. Thanks so much for having me on your show, Siddharth. No, I think it's this change in government in many ways, while it went a little against market expectations, I think it'll, from a longer term perspective, actually be better for the economy and better for the market, because all it does is bring in a certain framework or a certain set of expectations for the government, which wasn't in place prior to this. I think there was a lot of confidence in the government in terms of that what they were doing was absolutely right and they'd taken absolutely the right path. I think the election results tell you that that expectations are a little different, so you need to change your path. And I think to that extent, it will get more thinking in the government in terms of what kind of a policy framework there should be. So I think that's one part of it. I think in terms of specific expectations that the market will have, they will tend to revolve more around a little bit more on the social front, like this farmer spend that you're talking about that has already been announced. But I think also they are going to look at a certain amount of extra energy from a governmental perspective, whether it is different faces in the ministries or whether it is in terms of the interlocution with the market. I think those are changes that the market will look forward to. So all in all, I think, while it's been a somewhat unsettling change for the market, and that was reflected in the volatility you saw last week, I think overall it augurs actually quite well in terms of expectations being actually raised in terms of what the government could think of.
Aditya, is most of the volatility now behind us, and should we see a similar kind of focus as far as sectorals are concerned? Because over the past week, we saw this rapid churn in some ways away from capex or infrastructure play into consumption, and therefore, is consumption the theme that we need to be focused on?
Yeah, I suspect to some extent, yes. I think that fundamental shift needs to be made. One, from a pure market perspective, I think the investment side had done far too well from a stock market perspective, and you required a little bit of a reality check in terms of the numbers catching up with valuations, right? So that would have been a natural shift that would have happened in some way or the other. It's happened in a sharper manner, with the results as they've come through. I think as far as the consumption side is concerned, I think there are two arguments to it, right? One is, the simple market phenomenon, which is the sector has not done well. It's about time for it to catch up. The monsoons are looking good. I think that's one part of it. I think the other part of it is really in terms of the government's allocation of its resources, which I think, given the nature of the verdict, will tend to shift towards consumption. And I think that will augur well for that space. Now, I think, again, there are two elements to it. How does consumption pick up and how do consumption stocks do? I think consumption stocks will probably do a little better than consumption actually picking up over the next couple of quarters, unless there is a forced intervention by the government with, very significant policy strides in that space. But I do see the market's focus shifting towards the consumption side, both from a stock market performance, from a medium-term perspective so far, and in terms of the thrust that you're likely to see from the government, and I think we should see from the government.
Good afternoon to you, Aditya. Good to have you with us. Of course, you've set the context right in terms of how the markets will steer after the new government is in place. I think what remains for a larger viewers to really understand is what should be avoided and what should be invested right now. You've talked about some key themes, but what I want to understand from you, is it clear that the outperformers of the past will not be outperformers of the future? So say like defense story, the railway stories, the PSU story, or are you still invested fully into these?
So I would not be steadfastly into them. I would actually lighten my positions, and that would have been my view for an extended period of time because, kind of as you defined it, they are stories. There is a lot of reality to catch up with the valuations, and that risk has only been heightened with the election result that you've got. So I think those were, probably just overbought or overvalued in an absolute sense, irrespective of whether this election result would have come through the way it did. So I think that's one part where you necessarily need to step off the pedal and lighten your positions or retain any positions for that matter of fact, right? So I think I wouldn't debate that space, right? It's a question of how aggressively one were to shift into the consumption space. And I think as the market stands, I think that's where the bias should distinctly shift, simply because I think you could end up getting a fair amount of policy impetus, right, which will be good for stocks, even as I argued earlier, that the real follow through into those businesses might just take a little bit longer.
Okay, one more question which is linked to this has come in from one of our viewers. I'll take that with you. Samay from New Delhi is asking, which PSU sector should I start investing in now that Modi 3.0 is in power? So there is a lot of interest continuing in the PSU story.
In many senses, I would say I think the whole lot, given the way it's been valued up, I think one should be a little bit more patient with it rather than get into it aggressively. But if one wanted to get into it, then I think it's more, kind of the energy space, the utility space, which at least from an earnings perspective, the changes in expectations have not been that dramatic, right? They are large businesses that have been in play for a long time, rather than the newer ones which are based on turnarounds or huge order flows that are to be expected, right? It's also, I think, very important, from a PSU perspective, to keep in mind where those earnings are expected to come from. If you have defense companies where the government is expected to spend money and, that should be order flow and cash flow, yes, that will be order flow and that will be cash flow, but should you value it in the same way as a commercial entity? And whether the margins that are being extrapolated stay as the scale of those orders increases, I think that's to be a little cautious about. So I'd say if you wanted to stay in that space or wanted to invest afresh, then it would be more in the government utility and energy space rather than the other spaces.
One of the questions, Aditya, that's come in from viewers, and the reason I'm asking this is because of the debate we've been having about Atmanirbhar market and Atmanirbhar investors. Ashish from Bengaluru wants to ask you that foreign investors are selling Indian stocks. I think he really means in the recent past. And therefore, what he asks is, should regular investors like him follow the lead that the foreign investors seem to be sending out and sell?
No, I think investing at the end of the day has to be seen in many ways in the absolutes that you see, right? Whether the valuations are right, whether the underlying business cycles are right. And of course, in the Indian context, whether you have the opportunity to invest somewhere else where some other foreign investor is investing, right? So in that context, I don't think the foreign investors are necessarily a lead indicator of the market. If you really look at the last 10 years, exclude the last year, and they've been pretty marginal investors, in the market over a very extended period of time, right? And their considerations could be manifold, which, as I said, the domestic investor doesn't have that option. So I don't think they should be lead indicators, right? But I do think there should be a little bit of a reality check in terms of some of the narrative that goes around in the local market, that, it is inevitable that the foreign investor will come, he has nowhere else to go to, and that kind of stuff that I think comes up. One needs to be a little bit more watchful about it. India is a very large market. Foreign investors have $800 billion in it. the weightages in their benchmarks have only gone up progressively over the last 15 years. So I think it will remain generally a very favored space, but I think at a tactical level, I don't think too much should be read into their shorter term moves of getting into the market or exiting the market.
Aditya, if investors, any of them, and maybe it's a bit premature, but let's take that in stride. If they were wanting to now sort of construct a India consumption basket of shares, you know, a portfolio that perhaps rides on some of these expectations, but we'll have to wait for inputs like the budget to take a decisive call. But regardless, what kind of a India consumption basket would you sketch for our viewers?
Yeah, so I would probably break it into four segments, right? The first would be the staples, right, which should form to some extent the bedrock of your consumption basket. That, to remember, is going to be a lower volatile or a lower delta kind of space. So I think that should make up about 30-40% of your space, right? I think another 20 to 30% should be in broadly the consumer tech space that has tended to open up, because I think that is the one place which has a growth impetus, right? And a market concentration that is significantly superior to what you find in other places. Now, a lot of these stocks have tended to move quite a bit, but I suspect the growth dynamics there can be actually much more significant. And I think the next 10 to 20%, I think, should tend to be in a little bit more of the discretionary, you know, a la Titan kind of stocks, maybe a little bit in the consumer durable space, right? Where I think, you know, if you get any policy support from a consumption perspective, I think that's where you're going to get a reasonable amount of thrust. The fourth segment that I mentioned was, you know, spaces like typically the hotel space or the airline space, which has had a lot of momentum in the recent past. I'd be lighter in those spaces because I think some of those growth rates just might taper off a little bit, you know, given the kind of pricing that you're seeing there. And the fact that, you know, some of the growth rates that you've seen in the recent past have been on the back of a lower or a bounce back from extended bounce back from COVID.
Okay, so that's a clear basket of stocks that gives us a lot of clear idea as to how should one be really approaching the consumption space. So thank you for sketching that for our viewers. They are now coming to a word that you mentioned in your answer, budget. Of course, that's the next big trigger. What is the market really expecting from this new government, from the budget? What will it really like in the budget for it to move further higher from here?
So, you know, quite honestly, I think budget expectations are yet to really form up, right? Particularly in the context that the political situation is a little change from what the market was tending to kind of expect, firstly, right? Secondly, if you just track history, you know, I think you need to pick up one or two big themes from the budget rather than go on the minuscule, right? A lot of the small, you know, tax arbitrage kind of things, I think, have just diminished over a period of time. And they're not really material from a slightly medium-term investing perspective. I think, quite honestly, the one big thing that the theme for the budget, right, in my view, is just going to be the distributive element of it. How much is going in capex and how much is going in consumption or to the consumer, right? I suspect this is where this time there will be a marked shift from the trend line which you've seen, which is that consumption hasn't got support. And I think the thing to keep your eyes open for is some kind of a tax relief to the middle, you know, to the so-called middle class, which is paying this 25, 30, 35% kind of tax rate. I will not be surprised if you get some kind of a surprise there. In part because I think it's needed. I think the disconnect between 25% corporate rates and 35% individual marginal rates, I think that is very significant. Secondly, and I think it should be narrowed, quite honestly, I suspect, and I think that's also the political message that has gone out, I would believe, from some of the voting patterns that can be inferred. The second thing is, I think, if you want to make a big bang budget, right, and I think it's important for the government to make a statement simply because of changed expectations, and quite honestly, because it's going to be, you know, the 11th year of effectively the same government, and you've got to energize the budget itself, you've got to energize the audience, And I think you need to energize yourselves. Actually, you have to come up and say, "Hey, our third term is going to be the most energetic of the lot." And so I suspect I will not be surprised if you get something on the tax side, which is, for all it's worth, is something that I would actually recommend, because I think it makes a lot of sense. I think if it does push you a little bit in terms of the fiscal deficit, it is a call you should be able to take at this point in time.
Right.
Aditya, what's your view on the PSU space, and within that specifically the public sector banking play?
Okay, as I said, I think generally the public sector theme has probably, in my view, has run a very aggressive course. But I think, from a medium-term perspective, from a valuation perspective, I think it has run its course. I think that businesses are doing absolutely fine. I think there's no issue there. And for some of them, which is the government banks in particular that you refer to, there has been a bounce back. There is an upward trajectory, and I think they're sitting on pretty good balance sheets, right? That said, I just think the valuation framework has just changed far too dramatically for you to believe that they were nothing a year and a half back, and they are everything to the economy and to the market and to the investor now. So I think that expectation, in my view, requires some rationalization. Will it come through stocks coming off dramatically? I don't think so. But it could mean that you could have an extended period of a catch-up, particularly in the bank space, where, the banks have good businesses, they have good balance sheets, they are growing, right? It's just that the valuation framework, in the context of their ROEs, right, they are relatively high in terms of the context of their ownership. I think they are relatively high. And so to that extent, I think, I wouldn't necessarily sell them, the banks, but I don't know whether they are the ones that are going to give you the legs.
Aditya, one of the bigger gainers in trade today, in fact the top gainer so far at this point of time, is the Nifty Realty Index. And if you look at infrastructure, that continues to be also up, but a little down. Nifty Realty almost 1.6% up. And the trigger could be a news that we've been also playing out since early morning, that one of the key decisions that is expected in the first cabinet meeting is approval for an additional 20 million houses under the Pradhan Mantri Awas Yojana. Now clearly this will feed into several sectors. Do you think that the realty space will be one of the major beneficiaries going forward?
No, I actually think for the realty space, it's going to be for the reality listed space, right? It's a red herring, because the bulk of the money or the bulk of the sales that they're generating, which have been very robust, to be fair, right, are more in the high end. This is at the lower end. So if anything, the beneficiaries of this are going to be your housing and salaries, whether it is cement, whether to some extent, if there is financing support that's required, then your housing finance companies which operate in that space, rather than the listed reality space. The listed reality space has had a very, very good run. And I think the way those stocks are valued, a lot of them over NAVs, I'd say, it sounds good when you have a policy, when you have a policy towards housing that is put out and you get some initial momentum. It works well, but the reality is finally it plays through to businesses that gain from it. And I think it's going to be the lower end, the construction related, the cement related, and the paints related spaces that will be the biggest beneficiaries of this. And eventually the market will go there, if this, policy comes in place, which will not be this kind of stuff come in place. This political mandate.
This scheme was announced in the interim budget, which is PM Awas Yojana, Gramin houses, and Aditya, you are absolutely right, more focused towards lower end. A total outlay of 54,000 crore. Now those numbers more or less could remain the same or be recast or tweaked in the final budget. But Sakshi, as you take the next question, it's clear Ultratech Cement, one of the top gainers, right up there on the list, and you are seeing some of the stocks that Aditya referred to really do very well in trade today, Sakshi.
Absolutely. So construction related names, cement, paints, financing, those are the kind of names that Aditya is really bullish on. So we'll keep an eye out on that one too. But Aditya, could you also give us a sense of, what are your portfolio overweights and underweights? Could you give us that list, or maybe sectorally also if you could highlight?
Yeah, so I think, so my overweights would typically be the banking space. It would be the technology space. I think there is obviously a lot of debate, discussion, and the Indian market, Indian stocks revolve around what happens in the domestic market. But I actually believe that if you were to really look at an industry segment where India is globally competitive, right, it is the IT space. The rest are domestic, but you'll have cement companies in every part of the world. You'll have banks in every part of the world. It is in the IT space where you actually participate in what's happening in that space, and you compete very, very aggressively. So I think that's another space. The sector hasn't really done very well over the last 3 years. There have obviously been demand issues, but I suspect a lot of that is factored in. So I think that's a space that I kind of like. I think the larger banks, the larger private banks, I think there should be, again, there is no significant business thrust that you will get out of the budget or out of the changed political scenario. But I think if there is, the market has done very well and these guys have not done very well. And so there should be some kind of mean reversal or normalization, which I think is another space that's good. I think the pharma space, I think, is actually quite interesting because there again, a lot of the FDA issues and all that they've had over the last 5, 10, 15 years, I think that's like, very much part of their DNA now. They've gone beyond that. So that's another space one tends to like. Cement, fleetingly, I think cement, cement, again, yes and no, it's an expensive sector, but I think that you will get some impetus there which can be supported.
Okay, got that. One question that's come in from our viewer, it's from Bikaner. Sundar Bharia wants to know which stocks should I start investing in before the budget. If you could name a few that could remain unaffected by the budget. It could be difficult for you to specify the names, but if you could just generally tell us, if, of course, event, non-event, whatever it may be, some of the sectors that could continue to outperform.
So to me, the consumption space, right, in the order that I'd put out, on the back of what I believe will be tax incentives, right, that should be given to the consuming class.
Okay, got that. Right. We'll take one more question with you, and that I wanted to know as far as your entire take on valuations is concerned, Aditya. There was this entire talk, even before the election fever kick-started, that Indian markets are turning pretty expensive. We are back at record high levels. Now, come what may the policy turn, the reform orientation, what does it really do to the market cap and the valuations?
So I think, what has happened is it is no doubt expensive, right? Whether you look at it in a historical context, whether you look at it in terms of the growth that is being anticipated, right? And whether you look at it in terms of the returns that are generated. So I think it is from a conventional perspective, I think, it is expensive. I would just tend to believe that given the macro stability that you have, right? Given the evenness of growth that you have at this point in time, and the fact that the risks from whether it is balance sheet, whether it is currency, whether it is fiscal deficit or policy change is relatively moderate, I think it will remain a somewhat expensive market. So if you were to really, step back and compare valuations across 3 major markets, right, which is the US, where India is similarly valued with similar growth levels, or there's India then, of course, and the third is China. Now, China is substantially cheaper, and I think that is a place where you will get, a compelling valuation argument. As far as the India and US is concerned, their economy is in good space. They are economies that are competitive, and I think these 3 markets are going to rule the world. So the disconnect is with Chinese valuations. India is expensive; it will probably stay there. But if you don't see big risks up front, right, and the election was actually a big one, which played out in part, the market has changed its view very, very quickly. If you told someone, 2 days before the election that you'd get this kind of a result, people would have been much, much more wary. So the market also is suiting itself given the fact that businesses are doing well, the macro is stable. But I would suspect, higher valuations are probably here to stay for a while in India, unless the underlying economic starts changing. At the entire economy level or for large sectors, you start running into an asset quality cycle kind of thing. Unless that happens, I think you're going to stay kind of higher for longer, as they say, rather than being too high.
Aditya, one of the higher for longer reasons, among others, is the fact that the monsoon has arrived. First day of the monsoon in Mumbai, pretty good start. We also have other bits of data. Equity in mutual fund inflows up 83% in the month of May. Viewers, almost 34,700 crore. So see how this money is going to continue to chase stocks. And the answer that Aditya gave on valuation, this is some of the data that drives it. But between now and 5 p.m. at any point of time, viewers, we will have the new portfolio announcements and some more pointers for what should continue to be a very interesting week and days ahead for the Indian markets. Aditya Narain, thank you very much for your time with us today. With that, it's a wrap on this episode of Market Masters. We'll be back with more. Do stay tuned in.
Narendra Damodar Das Modi
takes oath as the Prime Minister